Vinod Karki joins us, Head of Strategy with ICICI Securities. Vinod, great to have you back. Thank you for joining us. While numbers have not
Hello,
been
Nikunj.
bad, they've not been great as well. Based on the numbers, where do you think the aggregate earnings trajectory is likely to move? Are we in for a big upgrade or nothing exciting?
Yeah, so Nikunj, I think if you go back a bit, the expectations were a little tepid, I think. That's why you're getting more beats as of now. So to that extent, it's a relief that the results are not as bad as earlier expected. That's point number one. Point number two is where the demand is showing up from the results. I mean, we do look at macros, and our thesis was that the investment-related capex cycle and real estate and credit cycle and some of the discretionary consumption was looking good from a top-down perspective. The results are validating that. So I think that is more important because we know that the investment cycle has a far more larger 2.5 times multiplier effect on aggregate demand on a sustained basis. That's more important because you could have a quarter or two of some demand from various angles, but it kind of fizzles out. But you have an investment cycle, a real estate, and a manufacturing cycle that gives you confidence that in the future you'll have more sustained demand going forward. So from that perspective, I think the earnings downgrade cycle will not be there. I mean, we have seen the earnings being maintained, forecast basically. And the best thing that's happening right now is that some of the euphoria around the market is becoming a little lesser.
Sure.
So that's good. Yeah.
Right. Yeah, so the euphoria is getting contained, but we know the big surprise this quarter was, of course, the kind of earnings that we've got from the pharma sector, right? Whether it was a Lupin, whether it was a Dr. Reddy, do you think there is a case to be made for further upgrades of this sector, even in terms of what brokerage and analysts are penciling in terms of EPS growth and target prices?
Yeah, so that was a big surprise. I mean, no one was expecting such results. And typically, we have seen that these changes start with a trickle. I mean, initially, you will get commentaries that there is some lessening of price erosion, there's some supply disruption. But this can, I mean, if this tendency continues, that there is demand and price erosion is less, and some of the guys there are vacating some of these areas, and it could become more structural. Having said that, the valuations are not extremely cheap, I would say. But this is a very good development. This part of the market, which is export related, along with IT, the softer outlook on IT is getting somewhat kind of compensated by the pharma exports picture, basically, right now. So that's a good development because we are comfortable with the domestic demand, but pharma is kind of offsetting some of the impact from IT.
Sure, since you're talking about IT, let's delve a bit deeper into that because there's a very interesting note coming in from JP Morgan this morning saying that reality has sunk in for the businesses but not for the stocks yet, and they are expecting a further downside to the IT stocks. Would you agree with that view?
So if you just go back to post-COVID, the whole digitalization story and the whole excitement, I mean, markets, everyone got overexcited about this whole new economy where the digital space will be significantly benefiting by all this. And now we see that the reality is that everyone is back to office, the whole physical activities are back. So I think some of this euphoria is kind of resetting. I don't think there is any structural issue with Indian IT services. But resetting itself is painful at times for some time. So I think the uncertainty will remain in the short term. But from a longer, medium term, I don't think this is one of the best sectors that we have in India where we add value to global economy. So I don't think there is any structural issue. But as I said, short-term reset is on the cards right now.
Could be that short-term reset. See, structural issue when AI is getting adopted, everybody is confused. December Infosys guidance was different, and their July guidance is different. So obviously there is an issue which they are struggling with. I mean, a company which is growing at 10-12% is talking about no growth.
Absolutely. I mean, so AI is something which is no one understands that well how much it will have. I mean, there are proponents who say that AI will actually benefit these companies over medium to long term. The short-term reset will obviously be more painful, but no one clearly knows. I mean, is it structurally positive or negative? But I would hazard a guess that over a longer period, disruptions in the IT sector have all largely helped their productivity improvement overall. But as I said, this along with the digital thing, these are shorter term resets, which will make it very uncertain, I think, for this sector.
All right, Vinod, appreciate your time. So glad you could join us. Markets